Tonight's date, April 5th, 2015, and tonight I want to talk about some of the adjustments that I've made recently over the last couple of weeks in the marketplace, as it's been a pretty choppy environment in my eyes, and I don't think it's been very fluid. You know, each day has kind of had a lot of slow elements to it, and maybe one day of the week there's been some, really solid activity. But the bottom line is, I'll remember this past month of March as being one of indecision and consolidation, and like I said, just kind of overall choppiness. And so the lesson I have prepared here is to show some of my trades the first couple weeks of March and show how I did, and then show kind of how I've traded the last 2 weeks of March. So kind of breaking it up in half, the first half being the first part of March, the second half being the second half of March, and kind of just looking at how I did and what some of my thoughts are and how I stepped back a little bit and tried to improve overall because I wasn't happy with my trading. So first thing I want to go over is just some of the key statistics that I really pay attention to with my own trades, and some of the things that will help you kind of understand the point of a lot of my writing here that you see. So right now, what are you looking at? Well, on the left hand side here you are looking at my gains and losses from March 2nd through March 16th. On the right hand side you are looking at a Word document that I've prepared that kind of contains some observations about these trades and so on and so forth. So the first things you need to know in order to preface everything I'm going to say: long trades. You see this category, long trades. This isn't long trades in the sense that I bought a stock and expected it to go up. This is a long trade in that it's any time I owned premium. Okay, I trade the options. So if ever I bought puts, that was a long trade. Even though I was short the stock, essentially betting on it to go down, since I owned the puts and owned the premium, it qualifies as a long trade in my statistics here. Short trades mean anytime I shorted premium. Any trade in which I shorted premium. So again, even if I shorted puts, which is essentially being long the stock, that's still qualified as a short trade because I was short premium. So that can be a little confusing, I know, so I wanted to explain that. Percent profitable, that is this column right here. This is just my overall win percentage rate. I make 10 trades, I win 5 of them, I lose on 5 of them, I have a win rate of 50%. I pay attention to that. The other one I pay attention to, and probably pay the most attention to, is the ratio of my average win to my average loss. This ratio is compiled, and it says how much do I make or lose for every $1 that I lose. So if my ratio here is 1.5 to 1, it means that I'm making $1.50 for every dollar I lose. If the ratio is below 1, if it's a ratio of 0.75, it means that I only make 75 cents for every dollar that I lose. So this ratio average win to average loss is very important to me because it tells me how good of a job am I doing maximizing my winners versus minimizing my losers. And in theory, I cannot trade well. I can have a low win percentage rate, but if my ratio of average win to average loss is above 1, then I can still be making money overall. Vice versa, I can have a good win percentage rate, but if my ratio is below 1, I can still be losing money. And then the last one that I pay close attention to is my efficiency. And the efficiency captures the best possible entry and the best possible exit per trade. You can see that under my trade analysis here. No, you will not. If you make a sound on your end, there won't be any sound on my end. Don't worry about it. So average efficiency, you can see it's this column. It gives me a total, and it gives me an entry and an exit efficiency. This is talking about the best possible entry and best possible exit per trade. So I'll give you an example. If I am bidding $2 on an option, and it's at $2.25, and then it comes down and fills my bid at $2, and then it doesn't go any lower before it starts going up. Okay, you with me so far? It comes down, fills me at $2, and then the next trade goes through at $2.10. That is technically a perfect entry. That is 100% efficiency, because it says the moment I took my entry was the best possible entry because the next trade was above where I actually entered my trade. I know that's kind of a lot to take in. And then the exit efficiency is the same thing except on the exit side. If I then go to exit at $2.50, my trade goes through at $2.50, and then the next trade goes through at $2.40. That is 100% efficiency. I exited at the best possible price, and technically if I wanted, I could have gotten back in lower on the next trade at $2.40. That would be 100% efficiency. My efficiency would be lower and lower if I enter at $2 and then and then the next trade goes through at $1.80. That's lower efficiency. Or I exit at $2.50 and then it goes straight up to $3. That's lower efficiency. These statistics are all provided by TradeStation. These aren't things I compute on myself. TradeStation just tracks my trade data. All right, so I wanted to explain those metrics so you guys understand what I'm basing everything off of, and just makes sense to you. So first things first, looking at this first 2-week period from March 2nd to March 16th, this was 11 trading days. I lost $911. 85% of those losses, or $778, came from premium shorts, times that I was shorting premium. I made a total of 94 trades, and my win rate was 42.5%. I made 48 longs with a win rate of only 37.5%, and I made 46 premium shorts with a win rate of 48%. My average hold time for day trades was 19.5 minutes. You'll see that on the trade analysis. This number shows 42 minutes, but that takes into account 2 overnight trades. So when you eliminate the 2 overnight trades, my average hold time was 19.5 minutes. My total efficiency during that stretch was negative 11.7%. My entry efficiency was about 44%. My exit efficiency was between 44 and 45%. My largest winning trade was $162, and my largest losing trade was $338. If you look at my trade list, I had 9 losing trades of at least 20% or more in losses, with the largest loss being 71%. 2 of those trades, specifically trade number 58 and trade number 91, I lost $262 on trade number 58. You can see that here, 52.6%. And I lost $338 on trade number 90, which was a 71% loss. Those were both spread trades. Spread trades, don't want to get completely into it, but a spread is where you own more than one strike or you sell more than one strike, whereas usually I'm just trading one particular strike, either long or short. So those were 2 spread trades. So those losses, that was $262 and $336. Those came from 2 separate spread trades. That's where a bulk of my losses on the premium shorts came from. So some observations that I have here when I look back at this period of trading from March 2nd to March 16th. Number one, while I lost a lot of money over this period, nearly all of the losses came on trades in which I shorted premium, right? 85% of my total losses were on premium shorts. Number two, I averaged 8.5 trades per day. Number three, I made 85 cents for every dollar lost. So obviously that's not going to cut it. However, on my long trades, I managed to make $1.42 for every $1 I lost. That's a pretty good number. If I'm making $1.42 for every $1 lost, that's great. My account will grow if I can do that. My average hold time, but just to go back for a second, but the problem wasn't, the long trades. Again, the problem was the short trades. That's what brought my average down. My short trade, my ratio was 0.55. So I made 55 cents for every dollar lost. Obviously, that's not going to cut it. My average hold time was 20 minutes. That's much too long. That is way longer than I usually like to stay in trades. My efficiency was terrible. I did not do a good job with my entries or my exits. My largest winner, I've got a good number on the largest winner, but my largest losing trade was 2 times greater than my previous largest losing trade on the year from January to February. If I just show this for a moment, it was pretty eye-opening to me when I looked at that, and I was like, man, that's pretty crappy. So my largest losing trade, remember, through the period was $338 from March 2nd to March 16th. My largest losing trade from January 1st to the end of February was $162. So I lost sight of something there with this stretch, this 2-week stretch, first week of March. It's not acceptable to have the largest loser be so greater than previous. Another observation, final observation. Trade number 58, and it was trade number 90, not 91, combined for $598 in losses, or 77% of my total losses from shorting premium. Remember, I lost $778 on my premium shorts. Well, the majority of that came from 2 trades. Those are the observations that I had when I looked at this. So some conclusions when I make these observations, I see what I'm doing here, I see what the results say, I come up with some conclusions. First of all, keep trusting myself when it comes to owning premium, as the trades look pretty good there, right? I mean, we touched on the fact that my ratio for long trades was 1.42 to 1, a very good ratio. My win rate was low, 37.5%, but I need to keep trusting myself because my execution looks good when it comes to how much I'm making on the longs. I just need to increase my win rate a little bit. What I need to do also is scale back the amount of premium shorts I've been taking, as those look like they are getting me into trouble. I need to reduce my average hold time. My strength is quick hitters, so I need to get back to doing that. My efficiency was down, particularly on my entries. I generally have lower efficiency on my exits than my entries anyway, so I was more concerned with my entry efficiency. So I want to focus on being very picky with my entries. This will improve my entry efficiency and improve my overall efficiency as a result, and that will help you make fewer trades. The pickier you are with an entry, the more selective you are, the less trades you're going to make. It's like, when it comes to dating, whether you're a man or a woman, are you open to dating anybody, or are you really picky with who you decide to go on a date with? Do you look for certain things early on that if they don't pop up, you're not even giving that person a chance? If you are very picky with your dates, you're going to go on less of them. If you're not, you're going to go on more of them. I needed to go on less dates. When it comes to my losses, my big losses were due to percentage loss, not over invested capital. So that tells me I was keeping my principles in line. I wasn't getting carried away with size or anything, and that's good. So I just need to keep my principles consistent. I just need to not allow myself to stay in a losing trade. because remember, 9 losing trades of at least 20%, with the largest being 71%. That's just crazy, stupid. Due to the spread trades, talked about how that created a huge loss for me, 77% of the total losses. I need to avoid spread trades for now. They're just messing me up. As much as I want to get better at them and employ them into my strategy, something's going wrong right there, so I just need to stay away. All right, so those were the conclusions that I had after this 2-week period. And the final thing I wanted to do is I wanted to take a day off to refocus and relax and, get back to being me. So I took a day off on March 17th. So now what I'm going to show is my trading list since March 18th. So I remember I took the day off March 17th, and then I came back. I've been trading. Oh, and I didn't trade on March 20th. I was out of town. All right, so these are my results since March 18th to April 3rd or April 2nd. Market was closed on the 3rd. So again, this is a span of 11 trading days since I didn't trade on March 20th. Just going to run down the list of what I have here. I made $626, $301 being long premium, $325 being short premium. I made 62 total trades with a win rate of 61%. 42 long trades total with a 55% win rate, and 20 short trades total, short premium trades, with a win rate of 75%. My win-loss ratio was 1.21%. Sorry, not percent, 1.21. So again, I made $1.21 for every dollar I lost. So on the long trades, that came to $1.25 for every dollar I lost. On the short trades, it came to $1.41 for every dollar I lost. My average hold time dropped down to 9 minutes. Remember, I was at 20 minutes in the previous period. Now I'm down to 9 minutes. My total efficiency increased to 23.5%, with my entry efficiency being 60% and my exit efficiency being 63.5%. My largest winning trade was $108. My largest losing trade was $102. I had 4 losing trades of 20%, of at least 20%, with the largest being 29%. I didn't have any loss greater than that on the week, or 2 weeks rather. So, some observations here off of these results. I made money with a solid balance of owning premium and being short premium, pretty much 50-50. I averaged 5.6 trades per day. The previous period I was at 8.5 trades per day. And the majority of that came from cutting down on my premium shorts. Only 20 total premium shorts here, 42 longs. Compared to the previous period, I made 48 longs, not much more, but I made 46 premium shorts. So I, cut my shorts in half, more than in half. I made $1.21 for every dollar I lost, and I was over a 1-to-1 ratio for both long premiums and short premiums, with short premiums sporting a very solid 1.41 return for every $1 lost. An average hold time of less than 10 minutes is exactly how I want to trade. My efficiency was pretty solid. I had above average entries and above average exits. Anything over 50% on entry and exit is above average. My largest winner and loser are about equal, which tells me I again did a good job of keeping my principles consistent, as well as my targeted percentage gains and losses. I did a great job, I feel like, of not allowing losses to pile up. I exited losing trades once they got into the danger zone, so to say, of 20% plus, which I usually don't like getting there, but in the 2 weeks previously, I was giving those 20% losers a chance. That's how I ended up with a 71% loss on one of those trades. Whereas this week, I didn't have anything over 29%, so good job in that regard. So some conclusions here. By trading less, same time, same period of days, but only 62 trades versus 90 some odd trades, by trading less, I was able to increase my win percentage, particularly on my premium shorts. And I also eliminated spread trades from my strategy, which resulted in greater efficiency and more improved statistics in my underlying trends. I reduced my average hold time, and that seemed to really benefit my overall approach and efficiency significantly again. And if that entry efficiency increased by so much, I must have been very picky with my desired entry in order to achieve the 60% entry efficiency. My exit efficiency was great too. The two resulted in a great total, solid trading, and by being pickier, as I thought from my previous conclusions, I made less trades. By making less trades, I became more efficient. The two kind of go hand in hand. And then I feel like I did a great job with my capital management. I hit a lot of singles, and when I got out, meaning, metaphorically, hitting a line drive to the second baseman or something, it wasn't due to not taking a good swing with the bat. I booked solid percentage gains, and I kept my losses manageable. So some broader thoughts here as it relates to the market, as it relates to my trading. I'm just going to pull up a chart of the S&P first. So you can see on March 2nd, that's the first period I showed you, the S&P closed at 2117. That was an all-time closing high. The market made a new all-time closing high on March 2nd, and since then, perhaps you agree with me, has been in a very choppy, slightly downside consolidation pattern. In the weeks that followed, I tried to adjust by trying new strategies I'm not really comfortable with, such as spread trades. In addition, instead of stepping back and being more patient, I became less patient and more assertive and actually traded more. The results, as you saw, were not good. So, took the day off on March 17th, cleared my head, and by stepping back and reevaluating, I realized what I needed to do. That was become more conservative and stay true to myself. I like only making a handful of trades per day, so I lowered the amount of trades I was making, brought that down, and I like when they don't take too long to execute, so I reduced my average hold time from 20 minutes to 10 minutes. I like when I can capture a quick 10 to 25% gain or exit with a 10 to 15% loss if need be, and I saw that show up in my ratios. So by trading less and picking my spots more carefully, I've been able to get back into a rhythm with my trading, and the results have been satisfactory. So the bottom line here, and the lesson, whatever you want to call it, is when markets change, which I feel that the market has changed somewhat over the last month, you need to change too. All right, you need to, whether that means changing your strategy or changing how often you use that strategy, something's got to give, because it's not going to be the market. All right, and I feel like I've done a good job of that recently, but there was a bump in the road, but the important thing is I took the time to study, hey, what's going on here? All right, I looked underneath the surface, looked under the hood of the car, and I saw, hey, I'm holding on to trades too long. I'm holding on to my losers. Hey, I'm over trading. I'm making 8.5 trades per day. That is way too many. All right, so I stepped that back. I looked at some of my big losses. I was like, dude, this huge loss came from a trade you usually never make, this spread trade. All right, stop doing that. Be who you are. Be true to yourself. Be true to yourself. I do want to learn spreads. I think they can be a very useful part of my strategy. But right now, my results are telling me that now is not the time to learn them. All right. So I just felt like it was important to have this webinar, have this conversation, because I've talked with some of you privately, and I know that right now you're doing what I did the first 2 weeks of March. You're just not trading well, and I know that sucks. It's not fun to go through, but you know, it's not okay. That's okay. Sorry. It's okay to struggle like that. But it's not okay to not try and do something about it and not really have a plan for adjusting and changing and saying, okay, well, let me try this. Let me change this. All right. So that's what I, hope you guys got out of this. It's not to say, oh, I'm doing so great in this market. I mean, as I showed you guys, I sucked the first 2 weeks of March. But the goal is to help you have a conversation with yourself and say, okay, yeah, you know what, he's right. Let me go back and look a little more closely at some of my stuff and see what's working for me, what's not working. So with that, I'll open it up for some questions here, and then I'll wrap it up with some insight on the S&P 500 and one or two stocks that I'll have in focus. So first question, do I have an idea of what I want my next strategy to be, or what my next strategy will be? I just think it needs to be more of the same of the last 2 weeks. These results that I've showed you, the back half of March, I just think that's what I need to keep on doing. Keep on, being small, keep on being conservative. Just because I've had some good performance now is not the time to start increasing my size or anything like that. Decreasing my size and decreasing my time spent in the market have been positives, so I want to stick with what's working. So that's the main thing. I don't have any new strategy. I want to just continue to use this and keep trying to execute well, because I'm seeing good results, so keep trying to do it. Any other general questions or anything related to what I talked about? Okay, so I'm going to look at a couple stocks here now, or index rather. So first off, I want to look at the S&P 500. Those of you who have attended this webinar the last few weekends, you know that this blue line up here that stretches across the top half of this chart represents the year-to-date close at 2058. That's where we closed in 2014. And you know that we still haven't really gone anywhere on the S&P. We're just kind of continuing to dance at this year-to-date break-even line. And to me, no one's in charge. I think it's tempting with futures down 15 points right now to say that tomorrow is going to be an ugly day. But you know what? Who knows? Until we break below these March lows around 2040, you can't get a decisive leg to the downside. Below 2040, and we can go down and test the lows from December and the beginning of the year around 1980 to 2000 on the S&P. But if you hold these, I'm looking for a bounce back up towards this kind of spike high just underneath 2100 and into that 2100 to 2120 range. So that's how I see it on the S&P. 2040 is the key level. I posted a Bulls versus Bears video that'll give you a further take on the S&P. You can find that in my blog or in the video archive underneath the Bulls versus Bears clips. Another name I want to look at here is Google, because to me Google has broken down, at least in the short term. Long term she's still got a solid base at $500, but short term we did break below the March low. I just pointed out on the S&P 500 that you need to break 2040, which is the March low. Well, Google's already broken down at her March low, which was right around that 550 level. So now Google anything below 550-ish, and in this previous support range, 550, 555-ish, has Google looking for further downside towards 530. 530 is where Google closed 2014, so looking for a test on the break-even line. In order to set up a bounce on Google, you need to get stability back above this 550 mark, and in order to set up a breakout, you need to get a higher high above that March high up near 580. If she were to bounce, it could be that we see this thing consolidate between 550 and 580 for a little bit. Earnings are due in about 1 to 2 weeks. I think 2 weeks, second week of April possibly. So we'll get some action there. But Google looks like one of the bigger stocks that's already broken down. Without talking about them, if you just run down the list and look at something like an Apple, you'll see that she is still above her March low. Twitter's above her March low. Priceline is testing its March low right now. Amazon still above its March low. Netflix testing its March low. And Tesla testing its March low as well. Google has, though, officially kind of broken down beneath the March low. So just pointing that one out as a good one on the short side, in my view, moving forward until we see some constructive activity to the upside. All right, guys, any questions on anything here? All right, guys, well, thank you for attending this evening. I will see you tomorrow morning, and let's have a good week. Take care.